Hi, I'm Rebecca Warnick, a CPA specializing in party and event rental companies with over 10 years of experience in finances. You made it. This is video number 5 of our 5-part series, 5 tax tips that every event rental company business owner should know. If you haven't seen them, be sure to watch videos 1 through 4 for other great saving tips. So stick around till the end of this video so that you can maximize your deductions and reduce your taxes. Keep more of that money in your pocket. All right, let's dive into tip number 5. Stay on top of estimated taxes. All right, guys, this is key. When you are operating your own business, nobody is paying tax in for you throughout the year. Maybe this is your first side hustle. You've always worked as a W-2 salaried hourly employee, and this is your first time venturing into business ownership. Or you're a seasoned veteran, you're kicking ass this year, and you're making a ton of money. Either way, under every scenario, we've got to stay up on top of estimated taxes. When you operate your own business, you are responsible for the taxes as the business owner. They can vary depending on what type of business you are. It doesn't matter though. We need to make sure that there aren't any surprises. Let's make those payments in partway through the year. What happens is too, you can save money by doing this because the IRS and states do charge interest and penalties if you don't pay enough taxes throughout the year, not to mention the burden on the finances, right? Let's say this year is you did gangbusters. You made so much money. Your CPA, I'm your CPA, I prep your return. We get to the end and I'm like, hey, you owe $50,000. And you look at me and you're like, hey, Rebecca, I don't have $50,000. I spent it. I bought 2 fixed frame sidewall tents. I rolled that all into equipment for my business. What are we going to do? One, we're going to set up a payment plan with the IRS. We're going to figure it out, right? That's fine. But we cannot have this scenario happen year after year. We need to be proactive and making sure that we stay up on those taxes. If you're paying $1,000, $2,000 a month, keeping up on it in the $50,000 scenario, it's maybe a few grand every month. It's a much easier nut. Plus, you haven't already spent the money or committed it to something else. So be sure to make those payments at least on a quarterly basis. One strategy on the complicated side that we really like to do, when you have an S election or an S corporation, we're going to pay that owner a salary. We've got 2 salary buckets. We'll deal with that in a different video on a different day. But you're going to pay that owner a salary. We'll withhold that salary, withhold a bunch into taxes, just like you would have if you had a regular employee and you were an employer and you were working as a W-2 employee. That way, every time we run payroll, every 2 weeks, every other week, whatever the cadence is, you're paying bit by bit into the IRS throughout the year. That way, there's no surprises. Look, guys, I hate it as much as you do. If I have to come to a client and say, you owe $50,000, do you think that's a conversation that I like to have? Generally, no. Unless the business owner is like, oh my gosh, we made $400,000 more this year, Rebecca. I'm so excited. And I've been telling you throughout the year, hey, save that. We've got that $50,000 bill at the end of the year. Remember, we've got that coming up. That's okay. But if I come to you, every dollar is spent, you've plowed it back into your business, paid your personal expenses, made sure that everything was good to go and invested in more rental equipment. And I come to you and say, hey, you owe $50,000. That conversation is going to suck for you and for me. Nobody wants to have that conversation. Make sure that you're regularly looking at your financial statements. If you're making money on your business, right? We're going to put that out in the universe. You are making good money. You're going to owe some taxes. If you don't make any money, you don't owe any taxes. So that's fine. If you're at a loss, this is not your problem. But if you're making money like my rental clients do, you're making money, we're going to have to pay taxes. Let's make sure that we're keeping an eye on that throughout the year so that you don't have big surprises at the end of the year. All right, guys, you made it to the end of the 5-part video. So tip number 1, track your expenses. Tip number 2, understand depreciation. Tip number 3, take advantage of the home office deduction. Tip number 4, maximize or deduct those mixed expenses. And tip number 5 is stay on top of estimated taxes. If you missed any of those videos, go find them, watch them. If you found these tips helpful, please share this video. If you have any questions, drop them in the comments. I'm here to help. I want to be your resource. We love working with party and event rental companies. It is our specialty, our niche, our passion. We understand how complicated your business is, and we want to support you all along the way. For more personal advice, feel free to connect with me on LinkedIn or visit our website, thewarnickgroup.com. Let's work together to make taxes less taxing and master the finances for your event rental company. Thanks for watching. See you in the next video.